Good morning to another present. I am Dr.V.Deepha from the Department of Business Administration. Under Financial Management, today we are going to discuss about the investment decision under the Unit 5. So, agenda we are going to discuss capital budgeting decision and evaluation method, dividend theories and policies, dividend policy objectives and consideration, share transaction like bonus, splits, buybacks and rights. Under capital budgeting concept, process of evaluating long-term investment determines which project to accept or reject under the investment. Consider initial outlay and future cash flow. Impact company growth and shareholders' value. Under discounted cash flow methods, under net present value, internal rate of return, profitability index. Under net present value of inflow minus initial outlay. Under internal rate of return, discount rate where net present value equal to 0. Profitability index, ratio of present value of inflow to initial investment. Account for time value of money, most theoretically it make a very effective under the cash flow. Non-discounted cash flow methods, you have to payback period, accounting rate of return. Payback period, time to recover initial investment. Accounting rate of return, average annual profit divided by average investment. Limitations, ignore time value of money, post payback cash flow. Useful for quick screening, not primary decision 2. Project evaluation and selection, identify and estimate the relevant cash flow. Choose appropriate discount rate under weighted average cost of capital. Apply evaluation methods. You are preferring net present value, internal rate of return. Consider strategic value and risk factors. So you have the project selection process under this given diagram. Dividend decision overview. How much profit to distribute or retain. After shareholders' income and you have the capital appreciation, signals financial health and future prospectus, balance immediate return with growth investment. Dividend theory, you have Walter theory, Gordon theory, signaling theory. Under theory, dividend policy irrelevant, value from investment only you are getting the policy. Walter theory, return if company return greater than the cost of equity. Gordon's theory, investors prefer dividends now, low risk perfection. Signaling theory, dividends signal confidence in future earnings, future cash flow, they are going to get a dividend. Dividend policy types, first constant dividend, constant payout ratio, residual dividend, stable growth. Under constant, fixed amount per share each year will be the fixed one. Constant payout ratio, fixed percentage of earning as dividend. Residual dividend, pay dividend after retaining for investment. Stable growth, gradual increase linked to earnings growth. Objectives of dividend policy, maximize shareholder value, wealth and return, retain earnings for growth and capital investment, signal financial stability and confidence, maintain stable investor bases and stock price. Practical consideration in dividend policy, first one liquidity position and cash flow adequacy, growth requirements and reinvestment needs, debt conventions and loan restrictions, shareholders base preference and tax limitations or implications. Bonus issue, additional shares issued free for existing shareholders from retaining earning no cash flow. Increase number of shares, stock price, signals confidence in earnings, improve the liquidity. Stock splits and reverse splits. Stock splits means divide each shares into multiple shares, reverse combine shares into the fewer but higher value shares, maintain equity value, improve stock liquidity. Used to adjust price per share for market Apple. Share buyback. Company purchases own shares from market, reduce outstanding shares, increases earning per share, uses excess cash and returns value of shareholders. Can signal undervaluation or confident in future. Right issue. Offer an additional shares to existing shareholders at discount price, protect existing owners' proportion, funds new projects, shareholders can participate or sell rights. Combined impact investment and dividend decision under capital budgeting, dividend policy, shares transaction. Summary under this PPT, under investment decision, capital budgeting, evaluating long-term investment. Then you have the best project selection under net present value, internal rate of return. Dividend policy balances under current returns and growth. Share transaction provide flexibility in capital management. Integrated decision maximize the shareholders' value. Thank you.